Welcome back to Random Gleanings. He is Jesse. I am Chris. Jesse, animal spirits. They're back.
They're back. Yeah, animal spirits, just kind of a market terminology for, I guess, good vibes is another way of saying it,
yes.
right? And it does seem with the move up since the end of October that at least there's an argument that animal spirits are back.
Yeah, so that's good. The one thing I'll say is that you've seen this kind of across the board. And finally, the Nasdaq Composite, not to be confused with the Nasdaq 100. The Composite is a broader, stock index. But we just had the fourth longest time period of no new all-time high in the Nasdaq Composite. And now that we've gotten it, it's 569 days. These charts are from our friends at Bespoke. So the next chart is just, okay, what happens now? So you can see, looking back to like mid-70s, a month out, yawn. I mean, no big deal. 3 months out, still not very consistent. I mean, you get 6 to 12 months out, it's usually pretty good.
Yeah, we looked at a chart like this on the S&P back at the end of January when it hit its new high after, January 3rd of 2022. What we said at the time was new highs beget new highs, right?
Right.
And this just kind of falls in line with that sort of sentiment that I think very often all of us kind of have this tendency of, we've hit this level before, and that's when things came back down. Well, the truth of it is that generally that's what actually propels us to the next level.
Right.
So,
we've talked a fair amount about the Magnificent Seven, and we've started talking about some other areas that may, improve as long as the economy is decent. Other than tech, I thought this was kind of interesting. This is another chart from Bespoke. This is the 11 S&P sectors and their current price to earnings ratio versus the last 10 years. And you know what's really interesting? We're not massively overpriced on tech, for example, even though we are at that 10-year
kind of at capacity
high,
or whatever.
Yeah,
right.
Yeah. But, I mean, if you wonder where you could have an expansion or the market continue forward, even if tech took a little breather, there's plenty of firepower here. I mean, Look at 1, 2, 3, 4, 5, 6 sectors, 7 sectors, all below 85. The 85th percentile of where they've been. Meaning, those things could start to work, and if they did, I mean, that would almost certainly propel the market higher.
Yep. Yeah. It looks like value sectors look like value sectors, right?
Right. So when the topic of animal spirits comes out, so often, the next question is wait, are we in a bubble? Right? Are stocks, is the bubble going to pop and stocks are going to crater and all those sorts of things? And it's certainly a worthwhile concern. I mean, certainly I went through 2001. We both went through 07 to 08 type time periods. And one of the things, and this was really more germane to that 2000 type time period, this is from our friends at Data Trek, and Nick points out that bubbles usually have a few pieces to them. One is the IPO market's just killing it. The M&A environment is killing it. Of course, back in 1999, I mean, you had or at least in the late 90s, you had egghead.com. You had, what else? You have pets.com.
Well, you can even go back to just 2021 when those parts of the market were much more, robust.
Right.
And they just, completely died off last year or in 2022 and kind of picked up a little bit last year, but there just has not been a mass expansion of the IPO market or M&A.
Well, and then the third one really applies to what we were just talking about. The Nasdaq Composite has not doubled over the last year. In every past bubble going back to the 1980s, IPO markets have been hot. M&A has a lot of deals, and tech stocks have typically risen by 100% in a short period of time. None of this is true right now.
Yeah, I heard Colas's partner Jessica say, it's got to double to be a bubble, right?
Okay.
So
yeah,
in regards specifically to the Nasdaq Composite. So, and yes, we've seen nice growth out of that coming off the lows, but it has not done a double in the last year.
Right.
So
right. Okay, so next topic. I thought this was really super cool. Rick Reeder and his team, they're not just fixed income team at BlackRock. They also do some other stuff. But I thought this was so interesting. The level of AI investment in the United States versus in Europe has just been stark.
Again, we're a country of creativity and ingenuity and everything else, and that's not to say Europe doesn't have their pockets of that, but I mean,
Sure.
We just chase it. We just go after it, and these big companies throw a lot of money at finding the next revolution. So
right. So here are the next iterations of kind of what Reeder's team was saying. In 2015, R&D spend in the United States was about 10% bigger, but now it's 2.5 times the size of what Europe's is. And guess what? As a result, profitability has skyrocketed. In fact, on the left of this chart, you'll see that the Magnificent Seven stocks in terms of profitability are higher than all non-U.S. countries except for China and Japan.
Yeah. Yeah, it's really stunning to see the profit that happens across America, good management, good companies,
Yep.
and a global market. I found this interesting in that they colored Apple's bar orange as if it's a country, because sometimes I think stocks as large as that is kind of represent nation states in some regard. But but no, that the Mag 7 is just dominant. It's just a dominant force, as is the U.S. market altogether.
All right, so next topic. I thought this was interesting. Our friends at Bespoke shared yet again that the Fed's kind of tilting a little more hawkish again with all this. Again, new highs across the board. Bitcoin at 69,000. Comments like "I'm comfortable being patient on policy." I mean that's taken as neutral, and that's good. I mean it is, I guess, neutral. But at the end of the day, if the economy's good, them cutting 3 times as they indicated at the end of December is kind of interesting, because if the economy continues to be relatively robust, you would think it'd be hard to cut rates into that.
I think that's right. And we're recording on Tuesday the 5th. I think Chair Powell is going to speak to Congress by the time this actually makes it out
right
on Wednesday. And so all of this may be for naught if he just decides that he needs to say something completely different. But all that's to say, to your point, kind of the speculation around Bitcoin and maybe some like super microcomputers and some of these other companies that have just gone parabolic here recently. I think speculation is counter to their idea of tamping down kind of inflation concerns.
And the next chart, which is the personal consumption expenditures, and they call it Supercore. He actually referenced Supercore PCE back in, when was that? Earlier in February, is that right? Mm-hmm. And you just had the biggest jump in months in those numbers. So it's going to be interesting to see what they have to say.
That's right.
For sure.
Yep.
The economy's good, and that's good, but dealing with it from an inflationary perspective is still kind of the big question. Animal spirits.
We'll see. We'll see if it continues. No reason to believe it won't for now. So.
Yeah. What you watching? You got anything good?
Oh, man. I can't say that we have. We haven't watched anything. You?
Suits. Yeah. Still finishing Suits.
I'm learning about track meets.
Okay.
And that they go for a long time.
Yeah. Yeah. Well, take your grill.
Yeah, maybe there's something to that. Yeah, we'll see. But no, it's good to see my guys going out there and giving their all, and so that's what's been taking up our time here recently. Very cool. Yep.
Well, thank y'all as always for watching. We're grateful to you. Please do click the subscribe button, click the bell if you want to be notified when we post, and feel free to share as well. Thanks so much as always.